AMD and Palantir are two AI stocks heading in opposite directions. Palantir's stock price is absolutely soaring, and investor enthusiasm in this AI stock is at an all-time high. AMD, meanwhile, is underperforming, and investors are disappointed in the company's inability to make significant progress against NVIDIA in the data center accelerated computing market. But which one of these two is the better investment at current valuations? Does the discount for AMD stock make it enough of a better investment compared to Palantir, even though Palantir is performing so well? I'll answer that question in this video. I'll compare the two on revenue, on profitability, on return on invested capital, and finally, I'll compare the two on valuation, both in terms of the market multiple, a forward price to earnings measurement, and also discounted cash flow valuations comparisons of Palantir and AMD. Yes, I'll share with you my DCF valuations for Palantir and AMD stock in this video. That's a lot to cover in a short video, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so looking at revenue growth over the recent 3 years, you'll notice Palantir overtook AMD, delivering 30% revenue growth in the most recent quarter, while AMD delivered 17.6%. The good news for both companies' investors is that they are both increasing the rate of increase. The second derivative is increasing for AMD and Palantir. And even better news is that this is expected to continue, especially for AMD. AMD has trailed. You can see that big drop off for AMD because of the cyclical decline in its business. Remember, AMD operates in the personal computing industry, which faced significant challenges coming out of the pandemic. People bought a lot of computers in 2020 and 2021, and then they didn't in 22 and 23. But those computers that were purchased in 2020 and 2021 are going to need to be updated and upgraded very soon. And that's where AMD will benefit from that part of its business. The other side of its business is thriving with the data center artificial intelligence. It announced its new GPU for the AI market, and that's going very well, comparatively speaking, with itself. If you compare it with NVIDIA, you'll notice it's not doing very well. But comparing to its own history, it's thriving. And it's difficult to compare any business with NVIDIA because they will fall short in most cases. NVIDIA is absolutely crushing the industry, delivering record performance in both revenue and profitability. Very difficult to compete against. AMD will tell you a lot of stories about that if you ask them. Palantir, meanwhile, is gaining traction with enterprises. This is what I had been waiting for with Palantir stock. It had always done a great job with governments and government institutions. What was missing was its progress with businesses. And in the recent 2 quarters, it's really accelerating the pace of development of its business with business. And that's what's really driving enthusiasm here. And that's what really has me excited about Palantir stock. Now, when I look at the operating profit margin over the last decade, I'll notice great improvement from Palantir Technologies, fast improvement from Palantir Technologies. For the better part of 2 decades, I don't even think Palantir cared about profitability. It was focused so much on improving its product and expanding its reach. And in the recent few years, it actually decided to focus on profitability. And real quickly, the company improved profitability. It's now at a 14% operating profit margin, almost 3 times the rate of AMD. But AMD's profit margins are uncharacteristically depressed right now because of those unprecedented circumstances on its PC business coming out of the pandemic. Not just the PC business, actually the gaming business as well thrived during the pandemic, and now it's struggling. So those parts of its business, not the gaming business, the PC business is expected to thrive in the next few years, coupled with the booming demand for its data center GPUs. I wouldn't be surprised if its operating margins exceed that of Palantir over the next 4 quarters and the next 12 quarters. I wouldn't be surprised if AMD's profit margins double that of Palantir, unless, of course, Palantir continues this incredible pace of improvement. Then they can be more closely matched. But I suspect both of these will be trending higher towards 20, 30, maybe even 40%. No, I don't think 40%, 20, 30% for AMD and Palantir, realistically speaking, over the next 4 to 12 quarters in profit margins. Return on invested capital, similar story with Palantir making great progress. 12% return on invested capital. AMD, again, uncharacteristically low. I wouldn't be surprised if AMD's ROIC approaches the 30% figures over the next, not the 4 quarters, but maybe over the next 8 to 12 quarters as the PC business rebounds. And of course, the data center business is almost a given at this point, given how strong that industry is, given how constrained NVIDIA is, right? NVIDIA keeps saying that, hey, we're sold out, we're sold out, we're sold out. That means there's customers that want these accelerated GPUs, and NVIDIA is not providing them. That's an opening for AMD, which is arguably, you can say, the second place player. If you measure in terms of market share, it is the second place player. And so it's going to benefit from that undersupply from NVIDIA. NVIDIA said they're going to be undersupplied for at least the next 4 quarters. And so that's an opening for AMD to enter that space and take some market share. Profitability looks great for both of these companies over the next 4 to 12 quarters, if I didn't already make it clear in the previous few slides. Now let's talk about valuation. And this is where the story changes significantly because Palantir stock is trading at such an expensive valuation, given how much the share price has increased this year. Palantir stock trades at a forward PE of 153 compared to AMD, which trades at a forward PE of just 25. So Palantir is roughly 6 times as expensive as AMD. Now, we saw that Palantir has been performing better than AMD across every category, right? Better revenue growth, better profit margin, better return on invested capital. And you can argue whether or not AMD will ever catch up when the cyclical rebound happens. Regardless, if these two were selling at the same price, Palantir would be the no-brainer. But they're not selling at the same price. Now let's look at the cash flow valuation of each of these. So I did the cash flow valuation model for AMD. I did this on October 7th. And when I did this, I found an intrinsic value per share for AMD stock at $180 per share. And the current market price is $130 per share. So AMD's intrinsic value is much higher than its market price, which signals that it's undervalued according to this valuation method. I get the opposite story for Palantir. So I did Palantir stock discounted cash flow valuation model on October 3rd. And I do need to update this because a lot has changed between October 3rd and December 9th when I'm recording this video. But when I did my DCF for Palantir stock, I found its intrinsic value per share at just $14. And the market price is now at $72. So my DCF for Palantir signals it's overvalued. So when I look at Palantir on a forward PE basis, it demonstrates to me that it's overvalued. When I look at it on a DCF basis, it demonstrates to me overvalued. So I'm getting the same signal from 2 different valuation sources for Palantir stock. The opposite for AMD, I'm getting 2 different sources signaling to me that the shares are undervalued. So my conclusion here, deciding which one is the better one to buy, even though I think Palantir is the better company, the valuation difference is too much. And so if I had to pick between these 2 AI stocks, I would pick AMD as the better AI stock to buy now. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.